David the Trader. It is May 31st. Thanks for joining me. We're going to go ahead and talk about the S&P 500. A lot of people have been wondering today, are we going higher? Are we going lower? Technically speaking, we had an inside day. We traded within the range of Friday in between the prices of about I want to say 415.09 down to 412.38. The low being one of the prior pivots here back from Friday. What I was looking for today was kind of a similar action. I was expecting more of a gap down scenario. We got that, albeit it was within that candle still, but it was a clean gap. Open, back tested a little bit, failed, came down within that first 15 minutes, and then little 15-minute correction. Retested lows, lows held. That was your long off the retest. We get a little bit of a retrace. At that point, you can kind of expect it to retest this red bar high. Test, failed. Test lower, failed on the test lower. So it's like we were failing both directions. So we kind of just resolved higher back into filling the gap area. You can see as soon as we filled that gap, we failed on a breakout, came back down, failed to break down, came back up, and then we kind of had two pause candles. Didn't fail at the breakout again, but then we finally broke through, which is, I call this a Pinocchio high. So we kind of like poked the nose through a level, and then we kind of came back down and we closed, albeit kind of weak. It was some seller pressure into the close, but I mean, it's not much more to make of an inside day. Pretty much what I'm looking for going forward is for the market to have volatile periods, and the volatility, I believe, is here to stay. Give me 1 second here. Pull up my daily chart. So as you can see here on the daily, we had the bottoming tail come in last week. That was also a Gann level. I'm going to get into more of Gann. W.D. Gann was a famous trader from the early 1900s. He traded during the Great Depression, amassed a wealth over $50 million. And he uses a time and price reverberation methodology. It uses like a square root calculator. And basically you're able to kind of predict windows of when the market should be volatile or should have a pivot. And if it does have a pivot, what level that pivot should come from. So you can see that we had a 3-day rally basically on a daily chart here. We had this low put in inside. Well, actually, that was slightly outside, but you can call that an inside day. So we had an inside day. Inside day didn't break up. We kind of back tested, held lows. Holding those lows there was crucial for bulls, and then we just had a kind of a relief rally. Now we're right back into horizontal angle. We are at horizontal resistance, and we have angular resistance. So I would expect more price action like this for it to keep continuing to come lower. I can give you a better example of what the angular resistance is on the futures. A, B, C off of that. So this is the 4, then your A, B, C, and then your 5. So if we get the 5 and this wave count is correct, we're projecting below 3,700 on the S&P. So keep that in mind for this, psychologically. If we do start breaking down, 3,700 definitely could be in play, especially if we break these lows around 38.07 on the ES futures. 1 second here. I was going to talk about some stocks. I'm going to talk about AMD. I was in this on Thursday of last week. I bought calls. I bought 94s, 96s, and 97s. I honestly didn't even think they were gonna hit because I bought them for Friday. Monster trade. But basically, I'll give you what my setup was. So we had basically AMD's been battling around $100 all year, right? Like, so I mean, at least not since April. April Fools has been pretty much line in the sand. Has been $100. I got that in the back of my mind. I see the double bottom here. I don't trade inside of here. I wait for the retracement. We got a nice day here, but I didn't want it that day because I felt that the market wasn't really given. If you had traded during the day instead of looking at it on a daily chart, you would have saw that the market wasn't really given like the signal to really go long. So, but when I really did get the signal to go long was on Thursday. I held the next morning. I think that evening, Nvidia had earnings, and basically they traded down after hours to around 152, which is ironically the prior low that they traded around the last after hours. And basically in sympathy, AMD's earnings report was a lot better than Nvidia's, but they were trading down in sympathy. But luckily I was like an option, so I was like, okay, well, if Nvidia holds 152, maybe we can see a trade back up. And that's why I was posting, is this an Nvidia buying opportunity? And basically for me, I wanted to be more exposed to AMD since it's a cheaper stock, and plus it had a better earnings report. So that was like my whole logic for the trade, and it was a very low risk. These options were trading like at 60 cents on Thursday. Well, some of them were. I think I paid 60 cents, 100. I think I paid 60 cents a buck and like a $1.25 for the different strikes or whatever. And I sold the next morning at, I believe, $98. 96, yeah, 98, yeah. No, 96 is my first exit. And then it ended up closing at 98. And then I held it again to 104, and I cashed them all out. I could have held it a little bit more because I had some that expired today. But yeah, I cashed them all out. Wasn't interested in taking assignment of any stock or anything like that, just because I know where we are in the market, and I would much rather be selling cover calls than taking assignment of stock. Can't talk about the market without talking about Apple. So Apple, same thing. We got a high today of 150.66. 150 has been the line in the sand on Apple for the last, say, month or so. Ever since it broke down from the 168, 167 level, it's been struggling. And Apple is pretty much like the entire mega cap market. Tesla's in there, Facebook's in there. Well, actually, Facebook's not in there anymore, but it used to be. Facebook, Netflix used to be in there, but they got beat up so bad that they're not in there anymore in terms of mega caps. I guess they still are, in terms of if you think about a blue chip, but the actual caps have come down quite a bit compared to their historical highs. And but Apple itself, it's not really that far off from its all-time high. It's at 150, all-time high is $30 away. It's a huge company. I really don't see a lot of unwinding in Apple so far, and that kind of is what scares me. The fact that I don't see a huge unwind in Apple yet. I mean, we're honestly back testing the breakdown right here. This pivot low, that's giving me balls to really want to go short, because you can get a nice level. You can really get a nice trade against that. If he comes back in there and it confirms, meaning that it closes 2 consecutive days above that prior low, then you would probably want to move out, because you could start at that point. Your structure is starting to generate a new pattern, and you're not within trend anymore. But so far, we're still downtrending. Like we got the 2 higher highs on Apple. So Thursday and Friday. And then we obviously have today, and we came up Pinocchio back into that level. That was your short entry. And like I said, we'll have to close above today's high for 2 consecutive closes for me to move out of that trade. Or it will have to give me a really hard like stop out against like maybe these pivots over here. I would say probably 156, 157, 158. This depends on the price action, how it is in there, if the buyers are really strong in the tape. And you'll learn that from experience. But those are kind of like what I was looking at in terms of trading Apple. I personally believe you should take trades a day at a time, and it's based upon what we see today and based upon a daily chart. I would want to fade this against 151, 152. Definitely. And if you did, you would have caught, I believe you would have caught a little bit of some profit intraday here. Give me 1 second. So yeah, oh yeah. Intraday, we got up to 150, 150, 60. You could have faded that every time and caught 50 cents. So that's Apple. Let's talk about the Qs. Qs pretty much same thing as the SPYs. They're just, technically a little bit weaker. Same pattern setup. You can see that they closed weaker than the SPYs today. I'm expecting the Qs to make new lows on the year. I'm not sure when, but I know they're coming, and I'll change my position if the Qs get above 330. IWM, I bought some puts on these today. Looking for 182 tomorrow. IWM was the weakest index today. Typically, when an IWM is the weakest, it is the leading index. So if IWM is leading to the upside and the SPYs are lagging, the SPY is probably going to pay catch up. That happened on Thursday and Friday. That was kind of like your tip off that the market might want to go long. IWM was strong early while the SPYs and the Qs lag. So keep that in mind. Let's talk about Google. Same thing here. Google's actually has relative strength in the market. Not a lot of people trade it, but it's just good to use for a gauge of market sentiment and what's going on. Tesla is everybody's baby. I don't like it. Granted, yeah, we got similar price actions how the index is looking and everything, but when you look at the weekly chart, it just doesn't really look all that great. We almost had a 3-week downturn in Tesla, and I would have preferred to see that over what it did, because now, or you can look at it as 1, 2, 3. That was red at one point and then it recovered. So, but yeah, just keep these type of things in mind. We're gonna take it a day at a time on the market. I personally think the market is just within the context of a bear market rally. How high can we go? I'm willing to give it to around 4,300 before I really want to change positions on that. And I just don't really see how we're going to get above that. It might want to chop around, bait people, get some discussion going, maybe draw the VIX down a little bit before I want us to make another move. But I mean, macro speaking, nothing's really changed. So what are we really going to do as far as the market goes? The market's pretty much crashed in growth names. The only thing keeping this thing up is mega caps. So once the mega caps start getting liquidated, then you'll start seeing a lot of recessionary talk, and we haven't had a lot of that yet, and it's supposed to come. So keep your heads up, keep your eyes out, trade smart, trade accordingly, manage your risk. That's David the Trader signing off.